Happy New Year! Today is Saturday, January the 2nd, and this is going to be the video for December the 31st, the last day of the trading year. And let's just take a quick look at the McClellan oscillator, which finished the year off right at the neutral line, just barely 7 points under neutral. So I was reading in Sentiment Trader, and I tweeted something about it on Thursday, that we spent an awful lot of time recently under the neutral line in the oversold area. It's like the market wants to go down but keeps getting propped up. Well, now we're going into a new year. Day traders' balances start at zero. And when I mean day traders, I mean traders that report themselves to the IRS as traders. That is a category of employment to the IRS, and you get special tax rulings if you make that declaration. For example, you can sell on the 31st and buy the next day that the market is open. There's no wash rules that apply to people who are traders on the with the IRS. And there are other deductions you're allowed to take. For example, you're allowed to take more than $3,000 of losses. You can take all of your losses because you're deemed to have bought everything that you own on January the 1st and have sold everything on December the 31st. So if you don't sell on December the 31st, the IRS doesn't care. They're going to treat your records as if you had sold that day. So people clear out their accounts, and they actually do sell everything that day. It sure didn't look like it today, though, did it? But anyways, let's take a look at the S&P. Here's the 5-minute of the S&P. And as the afternoon went on, the S&P just rocketed up to finish at if we go to the daily here, to finish at a new high right there. So that's quite something. I'm going to do another video after this where we're going to look at all of our key stocks that we've been following all year. And we're just going to look at the 1 year and multi-year charts and try to see what we can predict for 2021 based on the technicals, but I won't do that in this video. That'll be the next one. What I am going to do at the end of this video is show you something about NIO that I posted on Twitter and the importance of the chikou span. But anyways, here's our other stocks. There's the rocket that we talked about just Wednesday for the first time, and we thought that it might be an opportunity to buy. That was something that Andy was taking a look at. We didn't get what we wanted. We got a bit of a pullback, so we're still waiting to see about that one. Now, the lines that I had drawn are gone, but they looked like this. And we were looking for something that would break out of that wedge, but we stayed within the wedge. So that's still a stock that we want to take a look at, but I don't know what happened to my alert, but anyway, we're going to create our alert when it crosses the trend line. There you go. We could also create an alert at the bottom of this trend line if we wanted to go short on it. Square had a doji kind of day, but it finished off the day fairly well with this big spike of buying of Square right at the end. That would be people who were short on the day and they just needed to get out of their positions. But we created a gap here in Square, but on a weekly basis. What's really nice about this is that we have had a pullback to 27.2%. Now, it's not a Fibonacci that we look at all the time. We look at the major ones, 38.2 and 61.8 and 78.6. But the minor ones like 27 and 50 obviously are important, 50 particularly. The other ones down below, they're very minor, and I don't look at those very often. But here you've got a perfect stop, 1, 2, 3 days at 213.58, 27.2. So that should indicate for us that going into the new year, we should be looking at a revival here for Square. Best Buy, support on the 200, stuck between the 200 and the 8 EMA. We're not even going to look at CVS anymore. Apple, still trying to break out over this previous high. So we've got a double top here, and there's going to be an opportunity to buy Apple before earnings. I don't know when that is. We might look at different time frames. We might look at the 1 hour and look at the 1 hour. Let's take out the Woody's pivots for a second. They're not relevant to what we're talking about right now. But we're coming down close to the cloud on the 1 hour. But the chikou span moved through this gap. If we take out the 8 EMA, we can see that a little bit clearer. And the chikou span moved through this gap where, of course, there was no resistance. Now you've got the chikou span being ceilinged by these candles. And as time goes on towards earnings, the ceiling continues, and it's going to have to make a break at some point. So it's going to take volume, and it's going to take momentum. But you can see that the volume was selling on Friday, and again, that was just traders trying to clear out their positions. And if they're still bullish on Apple, they're going to get back in again on Monday morning. But look at the 1 hour for support on the cloud. 15-minute isn't that important for us, but let's look at the 1 hour, and that might be the point where we get support, and we start moving back towards the 100%. I'm going to leave NIO for a second. What else do we want to look at? Let's look at some of our new ones. Dollar General, below the 8 EMA, not doing anything in particular. Zillow pulling back from the 61.8. Boeing, pretty disappointing, even though the 737 Maxes are flying again. There you go. Sono broke out of this wedge a long time ago, came back down to test some lows, moved up and down. If you're interested in trading that, start drawing some Fibonacci's here and take a look at where the opportunities might be. ADP was something that was mentioned in the chats, and this is a very minor Fibonacci, but we have pulled back to 88.7. Remember, once we pass 78.6, the probabilities are good that we're going to go up and hit 100. We didn't quite hit the double top. We had some pullback. Now to 88.7, if we get some movement up next week and bouncing off of that, we should be retesting 182.32 again. FDX was also something that was discussed in the chats. I think that was Zach. And down to 23.6. Again, a minor Fibonacci. The one I would prefer to look at is 27.2. These are both minors, but we did stop there, and you can see that both of those minor Fibonacci's for FedEx were in play. So that's it. Where are we going next year? Well, let's leave that to the next video, which I will do right after this. But let's look now at NIO. So I finished the review of the stocks, but I want to show you something about NIO because I sold half of my position at 49.88. And I tweeted right at this point here, when price was here, I tweeted, that's why I've got this arrow here to indicate where I sent out the tweet, that looking at the chikou span, I expected the chikou span to find resistance on the candles as it went up and down, and then find support, and then go up, and then go down again. So up and down, meaning price would go up and down. So this was my prediction, is what would happen to price based on the reaction of the chikou span. And I said the resulting effect would be this in the price. That's exactly what happened. Does it always happen that way? No, but again, it shows you the importance of the chikou span. So if I take out all of my drawings, that's not what I wanted to do. But you can see that the chikou span right here was supported by this candle. That's where the clue was, that it was going to be moving higher because it was blocked by this candle. So the next candle is where it should have gone to, and this is where it stopped on that candle. And then it stopped here. You can see where my dotted line is crossing the chikou span. And then it stopped here. And then it started its move downwards, being reflected by the repulsion from those candles. And we started down. And we did move up, but the overall move in this area was up followed by down. And the resulting price was up, cloud rejection, down, up again, but followed by down. So you can use the chikou span. Is it going to give you candle by candle prediction? No. But is it going to give you trend prediction, future trend prediction? It absolutely is. We could go back to my tweets and let's go to messages. I'd go notifications. So let me go back to my tweets right here. No, how am I going to do that? I'm sorry, bear with me here. How do I see my own tweets? Here we go, home, right here. That's home, but I want to see myself, my own messages. There we go, there they are. No, there are messages, they're not my tweets. Shoot, there we go, here we go. So let's go look at my tweets. And you can see that I started talking about NIO. This was on December 31st. Doesn't say what time it was, but I was following NIO and RKT. Said current resistance is the R2 prior day Fibonacci level 161.8 and opening 15-minute high. So I was talking about NIO right from the open, and it was right at this point here where I started talking about the 5-minute chikou span as a beautiful tool that held me in the short, because I'd gotten out of my stock, but I kept my short 44 calls, and I was able to milk an extra $400 profit by just selling the stock and then holding on to those short calls and using the chikou span. I said it failed the 5-minute cloud right here, but the R1 is there at least as the last line of support right here. So the bottom of the cloud and Woody's pivot R1 showed that we were going to move higher. Here is the chikou prediction. The candles are resistance today. This is the potential 5-minute action just for fun. Let's see. I guess I didn't attach a chart. So there was the chart that I wanted to show you. And I didn't show you the prediction. I didn't attach the chart. That was stupid. But I only showed you the chart after I had gotten out. And I got out somewhere around here. As soon as I saw it fulfilling my prediction, moving up to, anyways, let's go back to the chart. I'm sorry. As soon as I saw it going up to here, I said, well, my prediction's probably going to be right. So I sold my calls at that point. I bought my calls back at that point. I closed the position. Had I held on to them, I would have lost my $400. I would have made it up here again. I would have lost it. I would have made it up. The point is, I got out here, and that's roughly where the stock closed. I just felt good about making an extra $400. Does that make any sense? I hope it did. Sorry the video was so long. Probably not very many people listening. Now I'm going to go in and talk about the stocks that we've followed on a 1-year basis.